When I sit back and really think about where crypto is heading, one word keeps echoing louder than anything else: tokenization. Not memes, not short-term hype coins, not even just DeFi yield farming, but tokenization. And the reason I bring this up so often is because I genuinely believe it's not just a passing narrative. This is the biggest structural shift happening around crypto right now, and it's going to define the next decade of finance. Now, let me clarify what I mean when I say tokenization. We're not just talking about a random NFT project or another digital collectible. I'm talking about taking real-world assets, bonds, real estate, treasuries, equities, commodities, money market funds, and putting them on a blockchain. That's tokenization. And it's not a futuristic dream anymore. It's already happening. Here's the part that gets people's attention. We're not talking about billions. We're not even talking about trillions someday in the far-off future. We're talking about trillions being the goal today. The biggest names in global finance, not just crypto-native players, are openly saying tokenization is a $100 trillion opportunity. And listen, I get it. Anytime someone starts throwing around trillion-dollar figures, it can sound like hype. It can feel like somebody's selling you a used car with a shiny paint job. I've had that reaction myself. Like, come on, are we really talking about hundreds of trillions moving onto blockchains? But here's the thing, it's not just me saying this. It's not just crypto YouTubers, Twitter influencers, or Telegram groups pumping a narrative. This is coming straight from the top, from BlackRock, JP Morgan, Citi, Franklin Templeton, WisdomTree, and other giants who control the backbone of global finance. If they are saying tokenization is the future, and more importantly, if they're actually investing and building around it, then it's not hype. It's a signal. Think about BlackRock for a second, the biggest asset manager in the world. Larry Fink doesn't wake up in the morning and decide to gamble on random crypto projects. If BlackRock is exploring tokenization, it's because they see efficiencies, they see new revenue streams, and they see this as inevitable. And they're not alone. Franklin Templeton has been tokenizing money market funds for years now. WisdomTree has been rolling out tokenized funds too. These aren't crypto brothers. These are trillion-dollar TradFi institutions moving real products onto blockchains. So let's talk numbers. Where are we actually at right now? As of the latest data, the total tokenized value on-chain is around $26.3 billion. That's it, $26 billion. In the grand scheme of things, that's tiny. That's a rounding error in global finance. That's less than the market cap of a single mid-cap stock. So naturally, when you hear people talking about hundreds of trillions, you start thinking, well, if we're only at $26 billion, doesn't that mean it's going to take decades to scale? That's a fair question, but I don't think it's going to take that long. Why? Because right now we're in the testing phase. That's what all the big players have been saying. They're not going all in yet. They're testing, piloting, experimenting with different blockchains, checking regulatory clarity, and making sure the pipes actually work. But once the clarity comes, once regulators set the rules of the game, the money starts moving fast. Let me put it another way. Imagine we're standing at the shoreline, and the tide is just starting to creep in. Right now, we've got little ripples, a few splashes here and there. But behind that tide is a quiet flood that's already begun. BlackRock tokenizing funds, Citi experimenting with tokenized deposits, JP Morgan with Onyx, BNY Mellon digitalizing treasuries, the White House itself recognizing tokenization as a key blockchain use case. These aren't tiny splashes. These are the first waves of the flood. And the most important thing here is scalability. It's not just about whether tokenization will happen. That's a given at this point. The question is, which blockchains will carry the load? Because let's be real, you're not going to tokenize hundreds of trillions on Ethereum gas fees. You're not going to settle real estate and treasuries on Bitcoin. You need networks that are fast, scalable, cost-efficient, and enterprise-ready. This is why I keep coming back to a handful of utility-driven projects. Stellar, XRP Ledger, XDC, Hedera, these aren't meme coins. These are networks designed for scale, for institutions, for global money movement. And if you've been paying attention, you already see the early traction. Stellar with nearly $500 million in tokenized value. XRP with institutional money flowing in. XDC tied to trade finance and real estate deals. Hedera experimenting with tokenized treasuries. These are the seeds. Here's where it gets interesting. When you move trillions onto these networks, you're not just parking assets. Those assets move. They're traded, transferred, locked in DeFi, used as collateral, and integrated into financial products. And every single one of those transactions requires the native token of the network. That's why demand for these tokens skyrockets when real-world adoption takes off. It's not about saying, oh, 1 trillion on the XRP ledger means XRP has a $1 trillion market cap. No, it doesn't work like that. But 1 trillion in tokenized assets means constant activity, constant velocity, constant utility, and that drives network value in a sustainable way. So yes, right now, $26.3 billion doesn't sound like much. But think of it as a spark. And once regulation clears the way, and it is clearing slowly but surely, that spark turns into a blaze. Suddenly, it's not crazy to think about hundreds of billions, then trillions moving on-chain within the decade. And when people look back, they'll realize this was obvious all along. All right, so now that we've laid the foundation, tokenization being the megatrend, the $100 trillion narrative, the obvious question becomes, who's going to power it? Which networks will actually carry this load? Because tokenization isn't just an idea floating in the air. It needs infrastructure. It needs rails. It needs blockchains that can actually handle the scale. And this is where the conversation gets really interesting, because we're not looking at a sea of 20,000 tokens on CoinMarketCap anymore. Most of those will never touch institutional money. I mean, are banks really going to tokenize treasuries on Dogecoin? No. Are they going to move global trade finance through Shiba Inu? Of course not. This is where the separation between hype coins and utility-driven networks becomes crystal clear. Stellar, XLM. The bridge for real-world money. Let's start with Stellar because honestly, Stellar doesn't get nearly enough attention compared to its impact. Stellar was literally designed as a payments and asset transfer network. From day one, it wasn't about hype. It was about moving money. And if you look at its ecosystem today, it's one of the most active players in tokenization. Right now, Stellar has close to $500 million in tokenized value running on its chain. We're talking about stablecoins, digital dollars, and tokenized real-world assets being issued and transferred across its ledger. In fact, Stellar is one of the few networks that already has integration with big partners like MoneyGram, Circle for USDC, and other payment providers. The beauty of Stellar is its simplicity. Transactions are fast, cheap, and built for global remittances. Think about the billions of dollars people send across borders every year. Traditional systems charge insane fees and take days to settle. Stellar collapses that down to seconds and cents. Now, apply that same efficiency to tokenized treasuries, tokenized real estate, or tokenized bonds. Suddenly, you've got a powerful foundation. Another thing I love about Stellar is its quiet role in the back end of TradFi partnerships. A lot of people don't realize this, but Stellar has been working behind the scenes with players like the United Nations for aid distribution, as well as fintechs in Africa, Latin America, and Asia. If tokenization is going global, and it will, you need a network like Stellar that has already proven itself in emerging markets where efficiency matters most. XRP Ledger, XRP, the institutional settlement layer. Now let's move to XRP. Honestly, XRP is the elephant in the room whenever tokenization comes up, because it's one of the most institutionally aligned networks out there. Despite all the drama, the lawsuits, the controversies, the tribal wars on crypto Twitter, XRP has managed to carve out a niche as a serious settlement layer for global finance. The XRP ledger is designed for speed and liquidity. Settlement in seconds. No mining. Low fees. And here's the kicker. It's one of the most battle-tested blockchains in existence. Billions of dollars have already moved across it for over a decade. That's not theoretical, that's proven. When you look at tokenization, the question becomes, how do you settle trades in tokenized treasuries, tokenized currencies, tokenized real estate? And the answer for many institutions could very well be XRP. Ripple has been laser-focused on payments, cross-border settlements, and liquidity provisioning for years. Their partnerships span banks, central banks, and payment providers in regions like Asia-Pacific, the Middle East, and Europe. Here's something worth emphasizing. Liquidity is everything. You can tokenize all the assets you want, but if they don't have liquidity, they're useless. That's where XRP shines. The XRP ledger provides a decentralized exchange, DEX, built directly into the protocol, meaning tokenized assets can trade seamlessly with deep liquidity pools. This is exactly the kind of infrastructure institutions need if they're going to move trillions on-chain. And despite the regulatory battle with the SEC, XRP has come out stronger than many expected. With partial legal clarity in the US and growing adoption abroad, the path is clearer than it's ever been. If you're looking for a network that could realistically power settlement in a tokenized world, XRP is a top contender. XDC Network, the trade finance specialist. Next up, XDC. Now, XDC doesn't always get the spotlight in mainstream crypto conversations, but if you dig deeper, you'll realize it's playing in one of the biggest markets of them all, trade finance. Trade finance is a multi-trillion-dollar industry. It's the backbone of how goods move around the world. But it's also notoriously outdated, with mountains of paperwork, slow settlement, and inefficiencies baked into the system. This is where XDC comes in. XDC is built for tokenizing trade finance assets, things like invoices, bills of lading, supply chain contracts, and even real estate-backed financing. By putting these assets on-chain, XDC provides transparency, speed, and liquidity to a market that desperately needs modernization. What makes XDC compelling is that it's already partnered with platforms like TradeFinex, which is pushing hard to tokenize real-world trade finance deals. And remember, this isn't about speculation. This is about unlocking capital. Imagine a small business in India that can tokenize its invoice and get instant liquidity from investors around the world. That's not science fiction, that's happening. And here's the kicker. Trade finance as an asset class is huge. We're talking tens of trillions of dollars annually. If XDC captures even a sliver of that, it becomes a monster in the tokenization space. Hedera, HBAR, the enterprise-grade powerhouse. Finally, let's talk about Hedera. Hedera is fascinating because it's not your typical blockchain. It uses a hashgraph consensus mechanism, which makes it insanely fast and scalable. But more importantly, Hedera has positioned itself as an enterprise-grade network from the start. Just look at its governing council. We're talking about Google, IBM, Boeing, LG, Standard Bank, and more. These aren't random crypto startups. These are global enterprises actively running nodes and steering the direction of the network. That's powerful. Now, in terms of tokenization, Hedera has already been dipping its toes into the waters. We've seen pilots around tokenized treasuries, green bonds, carbon credits, and even supply chain assets. Because of its efficiency and governance structure, Hedera is a natural fit for institutions that want predictability and stability in their blockchain infrastructure. Another angle worth noting is Hedera's alignment with ESG goals. A lot of institutional money today is tied to environmental, social, and governance mandates. Hedera's energy efficiency and commitment to sustainability make it extremely appealing in that regard. Imagine tokenized carbon credits or tokenized ESG funds running on Hedera. That's a very real scenario. And don't sleep on the fact that Hedera's enterprise adoption is already happening. When companies like IBM and Google are literally sitting at the governance table, you know the network has credibility. Putting it all together. So when you look across Stellar, XRP, XDC, and Hedera, a pattern emerges. These aren't hype coins chasing the latest meme. These are networks designed for real-world utility, institutional trust, and massive scalability. Stellar handles payments and stablecoins. XRP handles settlement and liquidity. XDC tackles trade finance and real estate. Hedera provides enterprise-grade infrastructure with ESG alignment. Together, they form the infrastructure stack for tokenization. And the craziest part? We're still early. Remember, the total tokenized value today is just $26.3 billion. That's nothing compared to the potential. But the pipes are being built. The partnerships are forming. The pilots are happening. And once the regulatory green light hits, money starts pouring in. This is why I keep saying, if you're in crypto and you're ignoring tokenization, you're missing the entire point. The meme coins might give you short-term pumps, but tokenization is where the generational wealth will be created. All right, let's zoom out for a second. Up until now, we've been talking about the mechanics, the networks, the infrastructure, the pilots, the partnerships. But let's talk about the impact, because tokenization isn't just another upgrade in tech. This isn't like switching from 4G to 5G. It's much bigger than that. Tokenization changes how value itself is stored, moved, and exchanged. And once you realize that, you start to see just how disruptive this shift is going to be. The end of paper markets. Think about how much of the financial world still runs on paper. Bonds, mortgages, deeds, invoices, stock certificates, trade contracts. You'd think by 2025 we'd have digitized all of this, but nope. A shocking amount of global finance is still trapped in outdated systems. That means delays, inefficiencies, high costs, and massive risks of fraud. Tokenization ends that. A tokenized bond doesn't need a certificate mailed to a bank's back office. A tokenized deed doesn't need weeks of paperwork to prove ownership. These assets become programmable. They become liquid. They become verifiable instantly. When you realize that trillions of dollars are sitting in a liquid, paper-based systems, the light bulb goes off. This isn't just about crypto making a quick buck. This is about rewriting how the global economy works. Liquidity unlock at scale. Here's the other big piece. Liquidity. Right now, huge asset classes are basically locked up. Think about real estate. You might own a $500,000 house, but unless you sell it, you can't tap into that value easily. Tokenization changes that. You could tokenize that property into digital shares and sell a fraction on-chain. Suddenly, real estate becomes liquid like stocks. Same goes for trade finance. A small business in Brazil with an unpaid invoice can tokenize it and get instant liquidity from investors across the globe. Carbon credits, art, even fine wine. Tokenization cracks open markets that were previously walled off. And liquidity is the lifeblood of finance. The more liquid an asset is, the more efficient and valuable it becomes. That's why the bond market is bigger than the stock market. It's liquid, it's tradable, it's global. Tokenization extends that liquidity to everything. Why institutions are quietly moving in. Now here's the spicy part. Institutions already see this coming. We're not talking about crypto Twitter influencers or Telegram traders. We're talking about BlackRock, Fidelity, JP Morgan, Citi, Goldman Sachs. These giants aren't experimenting for fun. They're building the next rails of finance. BlackRock is pushing tokenized funds. JP Morgan has its Onyx platform for tokenized deposits and bonds. Citi is openly talking about the future of finance being tokenized. Even central banks are experimenting with tokenized currencies. Why? Because tokenization solves their biggest problems: efficiency, transparency, and scale. It lets them settle instantly, cut costs, reduce counterparty risk, and access global markets in ways they couldn't before. And let's be real. Once these players move, everyone else follows. That's how financial revolutions happen, where Stellar, XRP, XDC, and Hedera fit in. Here's where our four networks come back into play. Because institutions aren't going to tokenize trillions on meme coins. They need rails that are fast, reliable, and built for compliance. Stellar, XLM, the backbone for payments and stablecoins, already trusted by fintechs and NGOs. Perfect for cross-border settlement and tokenized cash. XRP Ledger, XRP the liquidity hub, battle-tested and designed for institutional settlement. Perfect for tokenized treasuries and instant exchange of assets. XDC Network, XDC the trade finance workhorse, unlocking trillions in global trade contracts. Perfect for tokenized invoices, supply chain financing, and emerging market liquidity. Hedera, HBAR the enterprise-grade layer, trusted by global corporations and aligned with ESG mandates. Perfect for tokenized green bonds, carbon credits, and corporate assets. Together, they're like the plumbing of tokenization. Each has its lane, but they're complementary. And that's important because no single network is going to handle all of it. Just like in the traditional world, we have SWIFT, Visa, NASDAQ, DTCC, multiple rails that handle different parts of the system. Tokenization will be no different. The ripple effect on everyday life. So what does this look like for regular people? Because let's face it, most of us aren't managing billion-dollar portfolios. Here's the everyday impact. Sending money across borders becomes instant and cheap. Investing in global assets like real estate in another country becomes as easy as buying a stock on your phone. Small businesses get faster access to capital by tokenizing their receivables. Environmental projects can raise money directly by issuing tokenized carbon credits. Artists and creators can fractionalize ownership of their work and sell it globally. This isn't just finance getting shinier. It's finance becoming accessible. Tokenization takes markets that were reserved for the elite and opens them up to anyone with an internet connection. Why timing matters. Now, here's the big question everyone asks. When? Because let's be honest, tokenization has been talked about for years. But here's why 2025 feels different. Regulatory clarity is slowly emerging. We've already seen pilot projects get the green light. Technology is mature. Networks like Stellar, XRP, XDC, and Hedera are battle-tested and ready. Institutions are no longer experimenting. They're deploying capital. Macro environment. With inflation, debt, and economic uncertainty, institutions are hungry for efficiency and liquidity. All of this converges into a perfect storm. We're not talking about someday. We're talking about now. The punchline is this. Tokenization isn't just a trend in crypto. It's the next era of global finance. And the networks we've talked about, Stellar, XRP, XDC, Hedera, aren't just side characters. They're the rails being quietly built under the surface. When the switch flips, when trillions start moving on-chain, it's going to feel like it happened overnight. But in reality, it's being built right now, brick by brick. And those who position themselves early, not just in coins, but in understanding the narrative, will have the biggest advantage. So here's where we leave things. Because here's the truth. Most people aren't paying attention. They're still distracted by hype coins, meme projects, and empty speculation. But the real story, the trillion-dollar story, is happening quietly underneath the noise. It's tokenization. And that's the opportunity staring us right in the face. You don't need millions of dollars to play this game. You don't need to time every bottom or top. What you need is awareness, patience, and the courage to move before the crowd. Stellar, XRP, XDC, Hedera, these aren't just coins on a chart. They're rails for the next financial system. And when trillions flow through these rails, the world won't be the same. So don't wait for hindsight to tell you what you already know today. Start learning. Start positioning. Start preparing. Because the tokenization era isn't coming someday. It's already here, and it's moving faster than most realize. The only question left is, will you move with it, or will you watch it pass you by?